So at the moment, it's the best gain for the Nasdaq since April 23rd, obviously early. All sectors green except for energy. Let's get to Bob Pisani. Hey, Bob.
Good morning, Carl. PPI was hot, but not much of a reaction. It's growth that's leading. Most of the concern, obviously, was yesterday, and a lot of that move up today, a little hotter, obviously embedded in stock prices. Take a look at the sectors. Tech's leading. In fact, growth is leading. Tech and consumer discretionary up, and you see banks doing okay, too. Industrial is not far behind here. Energy, which had a good day yesterday with oil right near a new high, lagging a little bit today, so that's not a big surprise. Mega cap tech doing well, but remember, mega cap tech was never really the big problem. Most of this down around 10% from the 52-week highs. The fundamental guys really stuck with mega cap tech because the valuations were quite reasonable. It was thematic tech, speculative tech that really had a hard time. That's bouncing back as well today. We like to look at the ARC Innovation up 1%, clean energy, 3D printing, cloud computing. This is thematic technology that had such a tremendous run last year that's ran into tremendous trouble in the last couple of months, ever since February when rates moved up here. If you take a look at some of the big, say, cloud computing stocks today that have been down so much recently, they've bounced back. So Fastly, JFrog, Snowflake, that usual complex there, moving up 2-3%. But there's so much damage that's already been done. We've been doing this for the last few days, showing you how most thematic tech is 25, 50, even more percent off of their highs. I'm just picking on cloud computing for the moment here, but you see Fastly, JFrog, the same stocks I just showed you, 50%. So a 2% bounce today is nice, but when you're 50 or 60% off of the highs, that's an awfully long way. The momentum guys, even the momentum guys couldn't sell to other momentum guys. The fundamental guys didn't want anything to do with most of this stuff because it doesn't, in many cases, doesn't make a lot of money at all. So it's been ugly here, and it's going to be a long road back for them. As for where we are in the markets right now, most tech outside of mega cap is down 25 to 50%. And the debate is how much is enough. There is a lot of excess that has been taken out of these speculative plays here. Momentum has abandoned a lot of them, and fundamental hasn't had a lot to do with it. We'll see if this is enough here. Remember yesterday, a major tax bill now looks very unlikely. McConnell was really emphatic about it. That's a major plus for the markets now. The big debate right now is how sticky is inflation? Should the market give the Fed the benefit of the doubt that this is transitory? That's where the debate lies, and that's where the market risk is right now. As for inflation and stocks, it's good to remind everyone that it's a very complicated relationship overall. Some inflation is embedded in stock prices. If the market expects some kind of inflation, maybe 2%, when you get a sudden move, that's when things get bad. So if all of a sudden you're 2%, then you expect 4%, the market's going to adjust. It's going to expect it's going to have a higher risk premium. Concerns about earnings going to go down and prices are going to go down to adjust here. So remember something important. Inflation in a rising economy, which is what we have, has less impact than inflation in a declining economy when earnings are going down. We may be able to absorb this okay. And the margin pressure we're seeing has been very minimal. We're still around 10.5%, 11% on the S&P 500. No big pressure yet. We'll keep an eye on it. Finally, David was mentioning Alibaba. I just want to point out something that happened overnight. MSCI announced that they were no longer using the U.S. listing of Alibaba, which is right here behind me, in its indexes. And they're the guys that do all the big indexes around the world. They're using the Hong Kong listing now, Carl. Now, it's very interesting. Remember, Alibaba had that dual listing. MSCI says, well, we're using the home country now for the listings, but a lot of this still is related to that fallout with China-U.S. relationships, even if they're just using the home country here. So having that dual listing now is changing. They have the EEM out there. That's no longer going to use the U.S. listing. It'll use the Hong Kong listing. Just a little bit of fallout here between all. There's the EEM, and that's the MSCI index that they use there for iShares.
Shepard Smith here. Thanks for watching CNBC on YouTube.